Understanding market structure and the overall trend of the market is incredibly important. You want to make sure that you're on the right side of the market when you're trading. The old saying goes, the trend is your friend until it ends. One of the most important things is being able to understand when the trend is starting to end so that you can make proper trading decisions so that you're not caught on the wrong side of the market when it does decide to change. That's where the concept of understanding breaks of structure versus change of characters and what change of characters imply is an incredibly important concept, and we'll be building on to this as we begin to increase our level of depth and understanding of the overall strategy and how it integrates to supply and demand. So when we're looking at a standard uptrend, we're seeing price putting in higher highs and higher lows, breaking the previous higher high and creating a new higher high. That's a break of structure, and the break of structure is showcasing that we are continuing to move in an uptrend. We're seeing that series of higher highs and higher lows. We're breaking structure, breaking previous highs, forming new higher highs. And when we're in an overall bullish trend, our expectation is that price will continue to print higher highs and higher lows, and that will showcase an uptrend continuing. Now, how do we invalidate an uptrend? We see the previous higher low being taken and price moving to the downside. That's what we would consider a change of character. So when we're looking at an example of a standard uptrend in a bullish market and how it relates to a change of character, our initial expectation is that price will be creating higher highs and higher lows, higher highs, higher lows, higher highs and higher lows. And as long as we're completing that process in succession, we are in an uptrend. Now, as price pulls down to make a higher low, we're expecting that the next move will be to break the previous high, creating a higher high. So once we form that higher high, we're expecting that as price begins to retrace, that at some point price is going to find a level of demand to then form a higher low and then continue to move to the upside. But what happens when the trend switches, we then, instead of forming a higher low, we break the previous higher low, forming a lower low, and that is known as a change of character. The character initially was bullish. We were making higher highs and higher lows. We've now broken the previous higher low, invalidating a bull trend, and we've now formed a lower low. And one thing to note, because we formed this lower low does not mean that we have immediately started a downtrend. The way we then confirm that a downtrend is taking place is once we formed a lower high and broken this previous lower low, forming a new lower low, that's when we can definitively say, okay, the trend has begun to shift bearish. And again, what we would understand when we see a bearish trending market is that price would be creating lower lows and lower highs with the expectation of that continuing. The way a bearish trend would be invalidated is if the previous lower high is broken and a higher high is formed. That would be our change of character from bearish to bullish. So if we're looking at in a similar example, we have price putting in lower lows, lower highs, lower lows, lower highs, lower low. We're expecting price to form a lower high at some sort of supply area and then continue down to make a lower low. But instead, price breaks the previous lower high and forms a higher high. This is a change of character from bearish to bullish. Again, though, we haven't actually confirmed that price is in fact moving bullish. The only way we can truly confirm that the trend has switched to bullish is we need to see price print a higher low and move to the upside, breaking the previous higher high to form a second higher high. Once we see that, we then enter the same framework of higher highs and higher lows. And we're going to see this happening time and time again on charts where we'll go bullish to bearish to bullish to bearish. Ultimately, when we go back to understanding multi-time frame structure, this is exactly what's happening on a lower time frame when we relate it to a higher time frame. So for example, if a 4-hour is putting in a series of lower lows and lower highs, so what we would see on a 15-minute in this point of area, when we form the lower low and we're starting to create the lower high, generally speaking, the 15-minute is going to have to switch from bearish to bullish. That change would be called a change of character. And then once we create another higher high, we have now confirmed a bull trend on the 15-minute. And then again, if we look at this spot where we form the lower high and then start to form our lower low, we would see the 15-minute or a lower time frame creating higher highs and higher lows. Then price would then break to the downside, breaking the previous higher low, forming a lower low, and then continue to move to the downside. This would be the change of character from bullish to bearish, and this would be the change of character from bearish to bullish. It's as simple as that, but it's an incredibly powerful concept that we really need to understand when we're looking at market structure, when we're looking at trading supply and demand, because once we go a little bit further into supply and demand and start combining everything that we've learned into a trading model, what we'll begin to see, and I'll be getting a little bit ahead of myself when I say this, but just to conceptualize it and keep your mind thinking, is when we have, say, a higher time frame supply zone such as this, price comes into that higher time frame supply zone, we drop down to our lower time frames. This is the type of price action that we are going to be looking for to begin looking for entries on that lower time frame, because at the end of the day, we want to see price starting to change into our overall trend that we're looking to catch. So seeing as this is supply, we'd be looking to sell. If we want the best chance of success for our trades, or the best edge or probability in catching that successful trade, we want to wait for the lower time frame trend to also align with our overall trade idea. So in this case, we're looking to sell. We'd be wanting to wait for bearish price action on a lower time frame, understanding the fractal nature and multi-time frame application of market structure so that we can put ourselves in the best position to win. One thing to also note, and we'll go into this a little bit further once we jump into liquidity, but if we have, say, price creating lower lows and lower highs, we get that change of character, but then price then begins to move to the downside. This is what we would know as a liquidity grab. It essentially took all of the orders that rested above this previous high, but then continued the trend. If we're looking at it from a market structure mapping perspective, instead of this being a lower low and this being a lower low, what actually is happening is this is one price leg. This would be the lower high. This would be the lower low. This would be the lower low. This would be the lower high. This low would then be disregarded. But we wouldn't know that until it happens. And this is why it's so important to wait for that secondary point of structure to be made when you see that change of character to really validate a trend. Now, of course, if you want to be aggressive and start looking at a change of character on that initial break of structure, you absolutely can. But if you wait for that secondary break of structure to confirm the trend, you're putting yourself in a better position to win. You're waiting for more confirmation. Therefore, you're increasing the overall probability of that trade working out, or that trend starting to actually form in your favor. Of course, there are positives and negatives to being conservative or aggressive when it comes to applying this sort of information. If you're conservative, you might miss trades. If you're aggressive, you might take more losses. But as we dig into more concepts, we'll be able to add certain things that will help improve your overall edge. But at the end of the day, the most important thing is understanding how these change of characters integrate to the multi-time frame aspect of the chart, because what you're going to see when you look at any price chart, any trend, we're going to see this type of market structure playing out when we're switching from bullish to bearish, bearish to bullish. Initially, we had a bullish character or bullish market structure. Once we break the previous higher low, we have then switched the character from bullish character or bullish structure to bearish character or bearish structure. In this case, we are seeing bearish market structure or bearish character, and then we broke the previous lower high, forming a higher high. We've now switched from bearish character or bearish structure to bullish structure or bullish character, which is why it's called the change of character. And one thing to finally just mention is break of structure versus change of character. At the end of the day, they are one and the same. The only difference and the underlying difference that makes a change of character different from a break of structure is the change of character changes the trend. The break of structure is just simply a break of structure and can apply both ways. But generally speaking, if we're looking at break of structure, we have said that price is respecting the trend and it's doing what we expect. So if we see a break of structure to the upside in a bull trend, we're expecting higher highs and higher lows, and we're seeing higher highs forming via that break of structure. Now, if we're seeing higher highs and higher lows, but then that higher low is broken via break of structure, that's a change of character. Again, a change of character is a break of structure that changes trend. A break of structure is simply a break of structure, but more often than not, we gear it towards trending markets, because at the end of the day, it only really takes one opposite break of structure to change a trend. So therefore, a change of character is one point of a break of market structure. So what I recommend doing now is just really familiarizing yourself with this concept, how it relates. It's not an overly complex concept to understand conceptually, but it is something so powerful and something that we're going to be using a heck of a lot as we continue to, as we begin to deepen your understanding of supply and demand, as we begin to deepen all of the concepts being put together. Because what we can start to see when we're looking at changes of character, we have a demand zone. We're expecting demand to be respected for price to put in a higher high, for example. but instead demand fails, and what we end up seeing is supply being respected. And like I said in the market structure videos, if we see supply being respected and demand failing, we're in a downtrend and we're expecting lower lows and lower highs. If we're in an uptrend and we're seeing demand being respected and supply failing, then we're in a uptrend and we're expecting higher highs and higher lows. Now on the flip side, if we're seeing demand being respected and supply failing, and then all of a sudden demand fails and supply becomes respected, we've seen a change of character. And we can apply that whether we're using market structure or we're using supply and demand, because at the end of the day, what we're able to do is we can derive market structure from supply and demand, because they are one and the same. Market structure just gives us a little bit slightly different lens or framework that we can understand and use to trade. But it's as simple as that in terms of changes of characters and how they apply to the overall market. So definitely make sure that you understand this concept and are able to apply it on the charts.